Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, December the 13th, the year 2017. Consistency. That's what we want to strive for as traders. We want to be consistent. Now, I talked about focus. There's a slight difference between being focused and being consistent, because you can be focused one day and not be focused the next. So what we want to strive to do is to be focused every day, and that's where consistency comes in. So I hope you can understand the difference. So along those lines, I keep getting questions over and over about where do you put the stop loss. So I'm just going to bring up this chart every day. I'm just going to leave it in my in the profile I use to shoot these videos, because if you understand this, then you don't have to ask the question. Risk is the amount of money or the percent of your account that you're willing to lose on a trade. So maybe you're willing to lose 10 bucks or 100 bucks on a trade, or maybe you're willing to lose, a 0.25% or 0.5% or 1% or 2% on a trade. That is your risk. Now, once you know that, you can either determine what your position size should be or what your stop loss should be. So you already have the risk. You get to pick the risk, then you get to pick either position size or the stop loss. So for example, with the buy zone, you know that if you enter a trade, you're going to be entering somewhere between 0 and 10 pips from the daily open or the weekly open. Okay, actually the buy zone, I think I have it set for 8 and 10 pips. So you know that you should either stop out if price goes against you. So if you were going long in the buy zone and you entered a trade and price starts dropping on you and it crosses that open line, that's one place where you might want to stop out, or you might want to give it more wiggle room and you put your stop loss at the short zone, okay, where you're going to sell short. So since you know where your stop loss is, that means you have to determine your position size. On the other hand, if you always like to trade with the same number of shares or lots or units, then knowing your risk, then your stop loss will always be the same distance from your entry, because your position size is the same. Okay, now as your account grows, your stop loss will change if your position size stays the same. It's just simple math here. We're talking division, nothing complicated. You can use an old style calculator if you want. So I hope that answers the stop loss question, and if I have to, I will go over this every day. Like I said, I'm going to bring this screen up every day because people keep asking that question. And I'm not downing people for asking that question. Don't get me wrong. People want to understand, so I'm willing to explain it over and over until one day the light bulb goes off and they go, oh yeah, I get it, I see it. Because trust me, there were things it took me 6 months to learn, like positive and negative divergence. I just couldn't get it the way the guy was explaining. And finally, something clicked and I finally got it. And then since then, now I know. So, hey, don't feel that you're asking a stupid question. Don't feel slow. And once again, I'm not putting anybody down for asking this. So, because I'm here to help. Okay? So, that being said, let's go on and look. And the AUDJPY still hasn't filled. The rest is filled. Once again, we're looking at that weekly open in the gap. You can see here price is just 11 pips above the weekly open. and we look over at the daily, we can see here price came through the wick zone, and then it exited the wick zone. Looks like it wants to come back into it. Never quite made it outside of this wick zone, but it came in the upper wick zone and broke out to the downside. And once again, you can see the ranges of these pairs. You can see how the ranges, there's only a handful above 100. And we can look at the buy zone. As you can see what price has done. There was a nice trade to the short side there. These other ones, there's just not much range. But once again, you can see price exited both zones, and there was an opportunity to take some profit, even though it might have been very small, especially in the beginning back there at the Asian session. But it looks like London and New York activity is picked up. And we can see the rat zone once again. What happened? Price made a new daily high, reversed off of it. Price made a new daily low, reversed off of it. Happens every day. Whether or not you take advantage of it, that's up to you. And once again, it doesn't matter these market conditions or any of those other things that they're trying to get you to focus on or get you to believe in. No, this works every day. Just like the buy zone, it works every day. Just like the wick zone, it works every day. And here we can look at the pivots, and you can see here that price opened above the pivot, came down and through it, went away from it, but we almost hit S1, nowhere near R1. And you can see here we've got a future pivot point. So that's where we'd be looking to trade at the end of the day, fading the pivot. Now you can see here it came down and it hit the monthly pivot again. That's twice this month. And you can see it almost reached the monthly open. So once again, you know, trading these lines, we know traders like to put on positions, the big boys, around the monthly pivot. You can see here the weekly pivot has not been hit yet. And once again, the I guess I could probably take this missed pivots off. Now maybe I'll leave it on because since we're switching pairs, this way people can see that it works on whatever pair, and then I'm not cherry picking pairs. And once again, simple horizontal line trade. And we're looking at H1 right here. And you can see, using the H1 candle color, H1, that we just go with the color of the candle when it hits the lines. Nothing difficult, right? And this shows you the wick zone. It hit the upper wick zone, came out, hit the lower wick zone, came out. There's only 8 pips in between the wick zones, so you can expect a lot of action going back and forth there. That's just the way these narrow wick zones, this happens a lot. Once again, you can trade at horizontal lines as always. And you can see here on the price action screen. In fact, I've written a new little price action multimeter. I guess I'm going to have to display that. In fact, let me do something here. Since I mentioned it. No, maybe I'll save that. We can do that another day. Don't want to overload you, because today we want to talk about consistency. So here we go. Here we have it. Red candle followed by a green candle, high or low. Okay, right here, green candle, broke that high. And there you have it. Or is pips to be had. Once again, you see higher low, higher low, higher low, lower low. Okay, red, green. You can take that break there or take the break there, either one. You'd be in positive pip zone. So, consistency. Doing the same thing every day, each time. So you don't take one trade one way and then take a different trade a different way. And that's not being consistent. You know, you don't keep switching. You stick with one thing. You're consistent. You cut down on the variables. Price movement should be pretty much the only variable. You are doing everything else in a regular, recurring, consistent basis. So in this price action screen, like for example, you might say, I'm only going to trade after a 3-ball. So here, red, green, breaks that high, you go long. And so you say, after a 3-ball, I'm only going to trade long until I see another 3-ball. So there's your consistent method. So you've got a green candle followed by a red, breaks the low, and as you can see what happened next, and now you switch back to only trading long. That is consistency. And if you're using an M15 chart on one trade, you don't go and switch to an M5 chart on the next trade, and then an M1, and then an H1, and then a daily. No, you want to be consistent. It's just that simple. You just cut down on the variables. You cut down on everything, on changing things. You just stay consistent. So for example, if you say you're going to get up and trade the New York Open, then every day you get up and you trade the New York Open. If you say you're only going to trade on red news days, then those are the only times you trade. So you're consistent. Because there's many ways to trade. Not just the ones I present. There's plenty of other traders out there presenting their methods. But pick one, stick with it, be consistent. You know, once again, people were inquiring about the buy zone. And some people are asking about stocks, and some people are asking about Forex. But you can see here on the H1 chart, it pretty much tells you what to do. I mean, right here, this candle opened outside the buy zone. There's no trigger. You know, it's a black candle. It's a bear candle. You're not going to go long there. Okay? You see you made a lower low here and a higher high. You got an inside bar. So right here, if you were to go long and then all of a sudden it drops and it breaks below there, price action is telling you, you might as well just scratch that trade. Just take a few pip loss. Why? Because of the price action. There you go. It's breaking out of an inside bar. Once again, here's another inside bar. You see that's a higher low and a lower high. And you see here it didn't break out that way. It broke out that way. So right here on this inside bar break, you could have even jumped the gun before it hit the short zone. Now, of course, somebody's going to say, oh, that's all hindsight, but you can just look at your charts, bring up put these indicators on the charts, and just watch and see for yourself. You don't even have to trade it. Just watch it a few times. And then maybe you'll go, wow, you know, I wish I should have gotten in that trade. I mean, we just saw it right here.